Good morning. It's Friday. I'm Pete Najarian. This is The Take for Market Rebellion. And wow, what an exciting week we've had. We broke through one of the themes that had been playing out, which was that sell-off that we'd see at the end of the day, whether it was the last 2 hours or last 30 minutes, that sell-off theme was playing out. Not yesterday. As a matter of fact, yesterday, market started off getting hammered to the downside. And before we knew it, we got back up towards flat and then accelerated to the upside, and we accelerated all the way into the close. As a matter of fact, a huge move. And one of the things that was a little bit different, we broke out of that range where we'd been so contracted yesterday, about an 800 point range from the lows to the highs. And so a pretty substantial move in the markets. And that certainly reflected when we look at the volatility index. Volatility index yesterday, as a matter of fact, I look at the range, 33.5 to 39.25. Well, we actually closed out around 34 towards the lows of the day. So that's not terribly surprising because of the fact that we were ramping up to the upside, that acceleration into the close. And what an incredible acceleration. Well, what was really powering that? Well, interestingly, there's a couple things. One's pretty obvious, and it's been the common thing, which has been the semiconductor index. You look at the SMH, you look at that nice move to the upside. We had a lot of different names there that were powering to the upside. What was a change of pace was the great participation, the turn and burn from the lows to the highs in the financials. You look at the XLF and some of the leadership there. You look at American Express, JP Morgan, Wells Fargo, which had been almost one of these names that people were getting pretty scared because of that chart looking so bad. But the move, at least for yesterday, at least for a day, was pretty strong and a nice, big, swift move to the upside. And that financials participating, certainly a big part of what we were seeing yesterday across the major indexes. And that really pulling the markets a lot higher. So finishing up the day up a couple of percent. Matter of fact, you look at the NASDAQ, it actually kind of lagged a little bit towards when you look at the rest of the indexes. So that was something that's been a little bit different because we've had so much leadership day in and day out from the NASDAQ. But tech up about 1%. And meanwhile, you look over at the chips themselves, up nearly 3%. Financials up about 2%. And we had some pretty nice movement when you look in terms of option activity in Pfizer, in Merck, and some of those names as well. We hadn't seen as much of that. We've had Bristol Myers not too many days ago with some very large call buying as well. So the healthcare area, that has been a little bit more stable. And obviously we talk about biotech and the influence that's had on the NASDAQ. That has been a monster, absolute monster. As a matter of fact, the movement to the upside out of so many names, whether you go to the XBI or the IBB or the individual names themselves, really strong moves to the upside, and big pharma also participating in some of that. So what did we start off with today? Well, we get the retail sales numbers. They were even worse than expected. But let's be honest, when you shut everything down, that's going to be very, very difficult. So the estimates that went out there were looking for maybe down a little more than 12%. They were down over 16%. So the markets were trying to digest that. We had that big day yesterday. So markets started to push to the downside, but really accelerated to the downside on two stories. One, the retail sales. Yeah, that was kind of an obvious. Two was all of this hubbub going back and forth and the trade war starting to percolate a little bit, and President Trump and the administration with the shipment reductions and blocking with Huawei and all the rest of that. You throw all that into the mix, we're down a couple hundred points as we were in the pre-market and into the regular market session. And we were a couple hundred points. We were back down a little bit more than that, actually, towards the lows and pushing to the downside. And it was an immediate impact on what we just talked about in the semiconductors. So it was AMD, it was NVIDIA, it was Skyworks, it's Qualcomm, and Apple, of course, and all getting a pretty major push to the downside, contributing to that move. Well, we've definitely bounced off the lows. Now, we're not all the way back up into the green by any stretch, but I'm looking right now, NASDAQ down about 0.5%. It was down much lower than that. The Dow's down just a little over 0.25%, or call it 75 points right now. And volatility hanging around that 32, 33 range. So volatility continues to be in the markets, and it should be. Given the kind of movement that we're seeing, it makes a lot of sense that we're trading somewhere in the low 30s. That makes a lot of sense. We got up towards 39. That was probably a little bit inflated, and that sort of changes things. So I think if you're looking at the markets right now, you're looking at the volatility index, you're between 30 and 35. That sounds about right. You start getting much above 35, unless there is some major news out there, that might be an opportunity to start looking around and fishing around and using that higher volatility as part of what you're going to try to be doing to navigate through these crazy markets that we're in each and every day. And we love seeing volatility, of course, but sometimes it does get a little outrageous. And when we were in those 80s, wow, that really was an uncomfortable feeling for many folks out there. There's no doubt about it. But that's where you get those shifts. And when I say those shifts, it's where you use that higher volatility against your positions, and you use that in a positive way. So that's something I talk about all the time. I'll be on the halftime report today, probably talking about that once again. We talked about it on Wednesday, and I was trying to explain to folks that when the volatilities are extremely high, that's the opportunities to buy stocks and use that high volatility. When volatility starts to come back down and starts to get towards the lower end, that's when you want to start using that volatility to buy it because it's gotten a lot cheaper. Makes a lot of sense when you really think about that just for one moment. You see that volatility coming down, it's just like pricing. Prices come down, that's when you're wanting to be a buyer. Prices go up, that's probably when you want to be a seller. It sounds simplistic, but people always lose their way along that whole thought process. And as a matter of fact, as we've come down in volatility, I've watched the number of positions that I've got on the option side explode to the upside as I've watched some of those stock positions actually coming down. So that's just a little bit of trade school, if you want to call it that. Now, volumes. The last 2 days, we have had some serious volume. Volume is back. Wednesday, Thursday, averaging about 31 million per day. So some pretty strong volume, especially because May has started off pretty slow. We talked about that. Other than day one, we've had a pretty slow May, and the average daily volume is well off the year-to-date volume that we've been seeing. So it's nice to see a little bit more volume actually is taking place. Now, the leaders to the downside early, you had chips, tech, industrials, financials. To the upside, some of the usual suspects, the Zooms of the world, and some of those kind of names that we like to call the stay-at-home type stocks. So what are we really seeing today that really stands out? I'm going to give you one unusual option that I thought stood out. I don't like oftentimes actually trading the index options, but I love to see them because I think there is something to read through there. So we're seeing the utilities, the XLU, that index hitting today. About 5,000 of next Friday's expiring 56 calls. Another thing I like, risk reward. These are about a little over $1 out of the money. Stock's trading around 54.80, the ETF is. These are only about 40 cents. Risk reward, I really like that. There's a potential for these to actually start to accelerate and move to the upside if we see these utilities starting to move to the upside. And that would be something that could happen very, very quickly, and a very inexpensive option could have some value, much higher value than it is right now, in a hurry. So it's one that I definitely would keep an eye on. I have not made any moves there. I will be on the halftime report with some unusual options in some actual equity names themselves. Can't give that away now, though, but that should be pretty interesting. And it's a Friday, always interesting as you get into a Friday. I will tell you this, a lot of very, very short term, that theme continues. Now, the last thing I'll tell you, it's a Friday, we can have a little bit of fun. Live sports have not been around for a while. We all know that, and anybody who's a sports person, even people who aren't necessarily sports watchers or people that are normally in that sort of world, we haven't had baseball, we haven't had the NBA, the NHL, all of that. And, you know, at some point in time, we start getting closer and closer to football season. People will obviously be chomping at the bit. And there are so many other sports, NASCAR, and NASCAR is going to be kicking off pretty soon. Golf. Well, golf, Saturday, you're going to get the opportunity to watch a little bit. And I really appreciate that a local company, Piper, used to be Piper Jaffray. Then they made this move with Sandler O'Neill, so it's Piper Sandler. And they are sponsoring a charity golf. And this is going to be so cool, this charity skins game. They got Dustin Johnson, Rory McIlroy, Ricky Fowler, other guys. It should be pretty cool. No caddies. They're carrying their own bags. I mean, this is old school golf, right? And obviously social distancing, but nobody's going to be there, but it will be on TV, and it is for charity. So this is a pretty fun thing. That's going to be Saturday. Keep an eye out for that. We finally get to see a little something that's finally live. It's not taped. It's not old. It's not whatever. Actually live sports and golf. That should be pretty fun. That's going to be coming up this weekend. I think it kicks off around 1 o'clock. I said kick off because I'm a football guy. I think they tee off around 1 o'clock or something like that. So that's going to be worth tuning into. Folks, I'm Pete Najarian. Educate yourself. Get some educational help as well. The options world is where the explosive volumes are. I just mentioned how big they have been the last couple of days, but even on the slow days, those are huge record-setting days. We've just gotten spoiled because so much volume over the last couple of months has been flooding into the options world. Have a great day of trading.